Let's have a great week. Everyone doing all right? So this is what I think about our Congress here in the U.S. I think they should read this. Leadership isn't about getting your own way. It's about helping others find theirs. So we're going to help you here in FACE find your way, and there are many great traders within our community that are leaders that help me and the team find great ideas. Hello, Kareem, Patrick, everybody. So not much of a reaction with the government shutdown. In fact, it looks like the market likes it. S&Ps were down about 4 last night, only down 1. Dixie not doing much. Euro weaker than cable. Basically sideways for quite some time. I still give it a downward bias. Not for a major top, but I still think 121 is doable when you look at maybe a 4-hour. So maybe this was ABC for A, and this is a B wave, and we get C to the downside towards 21.5 to 21. So shorts may be justified with stops over this high, looking for this low to be taken out. That's my view on the dollar. The Dixie, they keep trying to make a new low in the Dixie, doesn't seem to be able to do it. So perhaps they have to take the euro down once and the dollar up once. This would be, they both be corrective. When I look at the pound, doesn't look much better to me. This was a stop hunt. Still think that there's a pullback here, at least towards 38. So I lean towards a little bit of a dollar bounce here. I don't believe these will be the major tops, but at least for a correction to the downside. Euro's winding up. Yeah, part of the wind up could be one more pullback Forex gal towards that 121 area before we make a move towards 121, 124.5, 126. Weekly has 61.8 coming in. I believe it towards that 126 level. Up here is 61.8. I think we're playing with the 50% level right here. So far, I think you could risk this, looking for some type of pullback before we make a new high sometime this week. Be interesting to see if they reopen the government, what the reaction would be. That might exactly be it. I actually thought the dollar was going to be much weaker. A little bit of a confidence crisis with this going on, but the unusual is becoming status quo, so the markets have very little reaction to a government shutdown. We haven't had one of these since 2013. That one lasted quite a while. That was the Republicans shutting it down because of Obamacare. And, you know, the Democrats could say it's about DACA, but it's probably just about control and the tax bill getting through, etc. So the way things look to me, it's a lot of neutral stuff going on. Maybe the team has some ideas on crosses, but the dollar pairs look, you know, sideways. I think all of them are overdone to the upside and are due for some type of pause before they continue higher. Even the yen crosses, same thing, possible failing rally here in euro yen. This has been a great recovery that we've had here. So this candle could probably risk the close over here. Maybe we correct back down to this pivot around 135 or so. Guppy, same thing. Guppy tried to break out last week. It's starting to look like a false breakout. I believe that Blake had this line showing it as a breakout on a longer term chart. Right now, this looks like this could be a failing rally with another pullback in here. So those are my thoughts. I thought I'd have a lot more to talk about after they close the government. The strength is still the commodity currencies, but even those, I can't get long Aussie. We have some glaring divergence here I don't have the RSI up on this chart, but Aussie looks like we could have a failing rally here as well. Short here, stops over the high, looking for maybe 79. So my bias is a bit of a dollar rally in the next several days, and then we'll see what the dollar is made out of. I don't believe it has bottomed. It could have, but you would think we would need a cleanse under this 90-20 level. But when you look at sentiment, it's certainly, I saw a tweet by Yogi Chan, it's the commitment of trader reports is so heavily slanted towards the long side, the short side of the dollar. Crude, crude's starting to look like it's rolling over. I thought we were going to get one more push up. Kind of has a look of a descending triangle. If we could start getting closes under 8.5, maybe we're heading back to 66. So I wish there was more to talk about. I'm sure that the guys who are the analysts that provide what you get here every day might have some other ideas on crosses. I see we have a couple of pattern in plays here. Euro pound, that's still working with the euro weaker than the pound today by Blake. And Stelios has its long-term pound Kiwi that he's been bullish on for quite some time. So
Dale?
Yeah, hey Blake, how are you today?
Good morning. Hey, run back over to your charts really quick. Okay, see in the upper right-hand corner of the, go over your chart, finger over, or the cursor over your chart. Okay, see that in the upper right-hand corner next to 7050, click that little blue, yeah, click that. There's your RSI. There's your RSI. Yeah, if you double click it, it'll disappear. So you can actually you move them out of the way and pop it back up, because I noticed you're like, I'm not sure where the RSI went. That's how it disappeared. It took me a while to figure that one out. Actually, I was a little.
Yeah, I just thought maybe it was playing hide and seek.
No, I remember when I first did it, I was like, "What the heck?" I couldn't find it again, and I realized that you just double like that. And
don't you think we picked a great mascot name for face people being eagles, the way the Eagles have been playing?
It worked out pretty well.
Yeah, the eagle flying around before the game yesterday. I thought of everyone in face when I saw that.
You know, I have to admit, I was a little bummed out that the Vikings got smashed. I thought that was going to be such a great game last night, and I'm not a huge Vikings fan or a huge Eagles fan. It's more of a, when you don't have a horse in the race, you won't see a good race. And so I was hoping that just for a good game, and a blowout like that, I was a little disappointed that Minnesota couldn't pull it together. It was hard to watch. It was hard to watch that game.
I know. I turned it off. But anyway, maybe it'll be a good Super Bowl. I mean, Jacksonville gave the Patriots a pretty good battle.
That was a great game, actually. I enjoyed watching that game. Anyway, for most people listening here, don't listen to American football, or watch American football. So we're gonna move on to the next subject. So you're absolutely right. Not a huge reaction in the dollar, and the gap up that we saw in the euro dollar overnight was swatted down. I mean, the euro dollar gapped up to the 122.70. The dollar was a little weak, and then it came right back down again, and we've been bouncing around a little bit, and I'm a little bummed out that we didn't get more volatility. I was really hoping the euro dollar would be up towards 123. I was hoping that the US dollar Japanese yen would be closer to 110, and because I was looking to play a little bit of a fade, frankly, I shorted the euro dollar and made like 10 pips last night, and I was like, it was like kind of, the
cost of entry. Yeah.
No, I mean, it's good money, based on the size that I was trading, but it still was like, I mean, a 10 pip gain for me, it was like, well, I can make her lose, 30, 40 pips intraday pretty easily. So I'm not, that was one of those, and then I just went back to watching football last night and spending time with my family. But I'm looking at the euro dollar just because this week, let's talk about opportunities that are going to present themselves later this week. First of all, we have the BOJ tonight, and the BOJ, if they are a little bit more hawkish in their assessment of the economy, this dollar yen, I have to point out we're finding support ahead of the 618, which is the 110.50 level, or 110.15, excuse me, level. But the Bank of Japan meets tonight, and I'm assuming they might be a little concerned with the recent yen strength, but at the same time, they're in stealth tightening mode, if you will, and so they may talk a little bit about monetary policy, and if they're not talking about staying looser for longer, or trying to reinvigorate the idea that they want to continue to keep rates extremely low and extremely easy, the dollar yen could push towards 110 tonight, and so that's just something that I think if you're trading the yen, you need to pay attention to. I would love to see a rally from where we're currently at up towards 111.50 to 112, and then get a move like this, looking for an eventual move down to below 110. I'd prefer to see that. I just don't. Yeah, I just don't know if we're going to get it. I don't know if we're going to get a move that looks like that. But that's what I'm preparing for, and I'm hoping for. Let's put it that way. I'm hoping for a move like that in the dollar yen tonight. Now the BOJ is a random time. They don't typically tell you when their rate decision is going to be, but I found it to be around 10, 11 o'clock Eastern time. So that's, at night. That's usually about the time frame. It's because it's right around the times that I go to bed, somewhere in that neighborhood. Usually they make their decision on rates, and then I look around and go, okay, well, it's time for me to go to bed. And sometimes it goes a little later, sometimes it comes a little earlier. They do have a press conference tonight at 1:30 in the morning Eastern time, for those of you that are going to be awake. Now, the other thing that we're paying attention to for this week is the ECB that meets on Thursday, and the ECB, I'm assuming they're going to start voicing some concerns about the recent euro strength, and I don't know if this is Mario Draghi's last meeting. I'm not 100% sure on that, but regardless, what I'm looking for is this week, I'm hoping that we get a euro rally towards 123, out of this triangle, maybe toward just above 123, so I can sell it. That's what I'm hoping is going to happen. But one thing that I drew here is we have a little bit of a triangle pattern. So perhaps we don't even make a move up out of this triangle, and we just start breaking lower. I mean, if we break through 122, I have to assume that we're going to start gunning for the 121 level, which is ultimately really big support. I think there's going to be a lot of buyers down here if we make a move down towards 121, because 121 121 was a good breakout point for the market. You'll see an uptrend line is right around there.
And you're going to think that Draghi wants to talk it down a little bit, don't you? Maybe that's a likely scenario, down to 21 for a buy.
I would think so. Yes, I would think so. And there's a couple factors regarding the dollar. First of all, yes, you have the ECB, which is, hold on one second. Sorry, I was just listening to a couple of these comments here really quick. Okay, so as I was saying, that the couple things is that the ECB is meeting, and I'm sure they're going to try to talk down the euro. They're above their, I think this is their threshold, the 120 level. Being above 120, they start to get a little nervous and probably want to make sure that they talk down the euro a little bit, I would think. And so I want to be short the euro dollar ahead of that. Now I'm already short the euro pound, but if I can get short the euro like early this week at 123 and change, I'm willing to do that ahead of the ECB meeting, because I think we'll be trading close to 121.50 ahead of the meeting. So like if I had to draw it out for you guys here, let me just grab a pen really quick. If I had to draw it out for you guys, what I think is going to happen Thursday is we go like this, and then like this, and then and we're going to be around this area going into Thursday, and I want to be short somewhere up here going into the meeting, because if the ECB meets and they really start to try to talk down the euro, or maybe they talk about they have to keep their options open as far as monetary policy goes, as far as continued asset purchases. Maybe we eventually break 120, and then we'd have a nice, this is a position, more of a positioning move. Then we'd have a sell-off maybe to 120. But I'd want to be short if I could get a good price going into the ECB meeting. I'm not going to be shorting the euro the morning of the ECB, but if I can be short at 123, and hold on. The Bloomberg squawk is talking about if our shutdown stays, if we continue to shut down, we might not be reporting certain economic data type of thing. Okay, so going back to my plan of attack here is if we can get short the euro dollar at the 123 level, maybe a little higher, and then at the ECB meeting we're at 122, I would be willing to stay in the trade, have my stops at break even, and say, okay, well, maybe they really try to talk it down here. That is what I'd be willing to do. I'm not willing to just, it's the ECB meeting and then just short the euro, 5 minutes before the meeting. I don't trades like that. I try to position myself ahead of the meeting, if that makes any sense, to get myself in a nice profitable position ahead of it. And if I can't, I can't. I mean, it's just, if I miss it, or if I'm not around and I'm not around to see it, or if it never even gets there, then it doesn't. But those are the things that I try to do as a trader, and I hope you guys can understand that concept, because a lot of people will always ask me, hey Blake, will you stay in positions during a interest rate decision or an employment report? And really the answer depends on how well I'm positioned going into that report or the interest rate decision, because if I have already got a profitable position and I feel that the outcome may move it even further in my direction, then I will stay in that trade. And that's, again, it's solely dependent on where I'm positioned in the market and how I feel about the market going into the meeting or the event. So, and that's why I try to plan accordingly ahead, well ahead of the events. Like I said, if I can get short up here and then at the ECB meeting we're here, then yeah, I'm willing to stay in the trade, because I think that they could continue to try to talk down the euro, but I'm not going to do it the day of the meeting ahead of that. And I see a lot of people that do that, and you're basically just rolling the dice. I mean, you have no edge when you take a trade right in front of a meeting. You are really gambling, and if you have that type of mentality, mentality and trying to do what we do for a living, you're just not going to make it. I think the chances of you making it as a trader, just when you're gambling, you're going to eventually shoot yourself in the foot and get hurt one day. And I see a lot of people that do it, and it's scary that people roll the dice like that when you're trading your hard-earned investment dollars and trying to just roll the dice, going into a news event. And I think you're better off going to Vegas, because at least you get, drinks with your bets. So, but that's not going to be the case here. I mean, does that make sense, Dale?
Yeah. I mean, it's great mentoring, and I agree with the drink part.
All right. Well, the cable has been very, very, and I know you talked about this a little bit ago. A couple things I want to point out about the cable, and being that I'm sure the euro pound, I'm hoping the pound continues to rally, but let me point a couple of things out. So first and foremost, if you take a look at this low, okay, do you see this low? This is from 2008, okay, or 2009. We broke above that at 135.50. Okay? We're well above it. This is the post-Brexit. See that low right there? That was the post-Brexit breakdown point. That comes in at 138.30. That was also, and you can see this fib here, okay? That is also the 618 retracement of the Brexit move. And that comes in at 138.30. As long as we remain above 138, the risk is higher, okay? The risk is higher for the cable, as long as we're above 138. Now, if the euro, let's say, drops 120 by the end of the week, let's say the euro completely reverses and we get down to 120, will the pound trade below 138? Probably. I mean, realistically. However, that doesn't mean it will. I mean, you could have the euro pound trading at 87 pence and the pound dollar at 138 or 138 and the euro dollar at 120. That could very easily happen as well. But as long as the pound dollar stays above 138, I think shorting it is very dangerous. Now, if you take this high, and I know I talked about this on the week ahead video, you take the high at 171, and I mean, this is, if you look at it, this right here, and you're talking about basically that is 3,350 days, which is approximately, I mean, you're talking, it's almost 10 years. That's a 10-year high, that 171 level, to the low. We're at the 38% retracement. And that comes in around 139, roughly, right where we're at right now. So what that really means to me is if the pound dollar breaks above 140 and you're short the pound in any way, shape, or form, you better be careful. Okay, so let me say that again. If the pound dollar gets above 140 and you're short the pound in any way, shape, or form, you better be careful. Because if the pound gets above 140, we have cleared the 38% retracement. We've then, at that point in time, in my opinion, we've really,
almost 78.6.
We almost ruled out the idea of a flag pattern. Like if you're thinking, oh, we got a flag pattern, you could pretty much throw that out once you breach the 38% retracement. We break through that, and we're probably going to 145 to 150. All right, and
nice look.
I mean, that's just something that I'm thinking about, because, and again, I hope that does happen. I hope it does, because that means the euro pound will probably be at 86 pence, and I'll make, my whole quarter will be made in that one trade. But I'm just telling you guys that if we end up, I mean, the risk right now is still higher. we get below 138, and then I think that that it's probably more of a, at that point in time, if we get below 138, it's probably more of a dollar story, that the dollar is recovering, which, the dollar, based on positioning and based on positioning both with the euro sentiment. I mean, the risks of the euro dollar, coming down from here, at least, retesting 121 to 120 is I think it's fairly high at this point. So I'm not saying that the pound's gonna break 140. I'm just saying if it does, it's gonna start squeezing, and it's gonna probably start to hurt if you were on the short side of it. And like I said, it doesn't matter what you're shorting the pound against. If you're short the pound Aussie or the pound Canadian or pound New Zealand, or you're long the euro pound, I mean, you're going to get hurt if it gets above 140. I think that's going to be there's going to be so many stops above 140. And I mean, I think if we get above 140, I'm going to play the pound dollar long and look for a move up to like 142, 143 pretty quick, like a squeeze, it's like that's got to be a line in the sand for a lot of traders, I would think, is that 140 level. Anyway, just I think that's some near-term risk for the cable right now. Another thing I want to point out is the Canadian. The dollar Canadian's been acting very well. If you want to play the dollar to the long side, I think the dollar Canadian, you got to keep an eye on it. It's been very resilient, and the NAFTA negotiations, we're probably going to piece together some sort of deal over the course of the next 2.5 weeks when the negotiations, I think the negotiations start next week. We're probably going to piece something together, but I have to imagine that if we put some sort of NAFTA agreement together, it's not going to be more favorable for the Canadian economy or the Mexican economy. I'm going to assume. And so I think that the dollar Canadian could still squeeze even if there is some sort of agreement. If there's no agreement, the dollar Canadian is probably going to go right to 130. And the dollar Mexican peso is probably going back to 19. But even if there is a NAFTA agreement, I have to assume that it's not going to be super favorable for Canada. They're gonna end up giving in to some of our demands, I would think. So that's something I'm keeping an eye on, because I think the dollar Canadian is still very resilient at this point. And even if we do come down and break through the 123.50 level, I still think that you're going to find a lot of support down here. It's really diverged when you talk about dollar weakness. We've seen dollar weakness against the euro and the pound, and the other commodity currencies, the Aussie and the Kiwi, has been very strong, but the dollar Canadian has been holding up. So it's just that divergence I think we all have to pay very close attention to. Anyway, I'm gonna to trading this morning. I want to just cover a couple of those key items with the dollar pairs. I'm assuming Steve is here. Steve, are you listening in?
Hey Blake, good morning.
Good morning. Good morning, Steve. I hope you've had a great weekend. How things going?
Great.
Good. Aside from being a father, hope you had a weekend.
Yeah, we are trying. As much as it gives us some time to try to have a weekend.
Well, I left you with plenty to talk about today. I only covered a couple of dollar pairs. So I want to wish you all a great Monday and a wonderful trading week. And thanks for everybody listening in. And I'm going to pass it over to my colleague, Steve.
You too, Blake.
See you later.
Have a good one.
Thanks, Dale. Thanks, Steve.
Hey, Steve, before you get started on what you're looking at, sometimes these questions get lost as we go on. But Barry Folks, came in early to ask a question. It's the first one. If you scroll back, and I don't follow.
Yeah, I'm reading it now. Can you check CNY, JPY monthly?
The one, yeah.
Then I note BRIC countries charts are all in wedges on daily. Sure. Yeah, we can
Barry, we didn't forget about you, buddy.
Why not? Haven't done any analysis to it, I can tell you that in advance.
Yeah. But sometimes, you know, not sometimes, a lot of times, some of the things that people are thinking about in here in phase
Absolutely.
direct
I
us
totally agree with you.
maybe we should be paying attention to.
I see him mentioning wedges.
Yeah.
Okay.
The S&Ps love the government shutdown. Wouldn't you have thought after that it would have been down at least 2 handles?
Nah, I mean, you know, nothing would surprise me anymore
I
with
know.
US stocks. Nothing at all. You know, I see more of a channel here, not a wedge to begin with for now. Of course, you know, he might have something like this in mind. In which case, you know, I need more points of contact to call this a wedge. But I can tell you, you know, one thing for sure, that there we go, that I don't see the move higher being an impulsive one, meaning that, you know, if he's looking lower, probably at some point that's going to happen. I think for now things are quite simple. You know, you monitor this channel, and you know, probably a break below 17 is bad news because, you know, we'll point lower. Otherwise, you know, the slow grind higher might resume for a period of time. As long as we stay in the channel and, you know, we resume moving, you know, in this slow ascending channel, I would say that, you know, don't try to fight it. But if we do break below the channel, especially in this case, you know, it was a 38.2 at that high exactly. So the first time we turned around and we tested the 38.2, we got rejected, as you see. Then we had a clearly corrective move lower. You can clearly see this as an ABC, and now we're ascending again. I'm seeing, you know, we don't have Gregor here, but, you know, at a very, 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 you know, fast view and analysis, what I'm seeing here is something like this. And at some point, you know, this is going to be a C. If we also measure this with an extension from the low to the high, there you go. You have an equality target at 1780, roughly. So there you go. That's what I see here for now. And this might be itself a larger ABC, as you see. You know, that's why it's always nice doing a top-down analysis, because, you know, you're looking at this and you're like, oh, this is an uptrend. Then you're looking at this and you're like, oh, this is likely correction. Then you're looking at this and you're like, okay, that might be a correction to this move. So it's also important to keep that in mind. Depends on what time frame you're trading. Okay, so that's what I'm seeing here. So I would agree with you if your point is that you're expecting this to roll over and move lower. Yep, seems likely to me, but, you know, we still don't have an indication that that's starting. It's likely that we're going to resume, you know, this slow grindy move higher somehow before actually, you know, moving lower. So what's the channel? Okay. Okay, let's go to more popular pairs now. I'm always happy to look at whatever you want me to look though, and, you know, it's as Dale said, you know, for us, it's in many occasions. Blake can tell you as well, because Blake has been doing webinars since the Earth started rotating. That, you know, very often people asking him on webinars in the morning edge, etc., you know, gave him some very good ideas, or you know, drew his attention to something he hadn't noticed. So, you know, that's why we're here. Let me see what other questions we have. Hi, Blake. Okay, that's for Blake, but let's read it anyhow. ECB and BOJ, what are your thoughts? Okay, he already covered that. Eric says that Draghi isn't very good at talking it down. Actually, Eric, I kind of disagree with that assessment. I'm going to explain to you what I mean. Draghi hasn't been successful lately in talking down the euro, but if you remember, he was extremely successful, talking up the eurozone economy and its chances and the diminished probability of breaking down or whatever when it actually mattered. What I'm trying to say here is that the market pays attention to what actually also coincides with reality. So bottom line, in this case, trying to talk down the euro, considering that fundamentals are definitely improving, is not an easy job. So I don't think that it's a matter of Draghi's personal credibility. I think it's here we have a problem that the ECB is trying to talk down a currency that was and perhaps still is somewhat underpriced for a period of time. Okay, as it was completely overpriced at 140, by the way. So I think that's what plays a role and what matters a lot. Abdul wants us to have a look at the Euro Aussie and the Euro Kiwi. Let's go ahead and do that. By the way, Blake covered more or less the euro, covered the pound. I really don't have much of a different opinion here. I can tell you though, since we're looking at the indices, we talked about a little bit, about the indices. I can tell you that I'm monitoring this steep ascending channel on the SPX. I do expect that I don't care, or I don't know if what the occasion is going to be or what the trigger is going to be, but I do expect that this week we should see some kind of a sell-off. I'm not expecting that it might be prolonged or whatever, but I do expect that this week we're going to have some kind of a move lower. Other than that, let me show you the DAX as well, because I think the DAX is at an interesting juncture here. You can see here that the DAX has been in an expanding triangle. So, obviously, as long as we stay on a daily basis, on a daily closing basis above this horizontal support area, the DAX remains bullish. But obviously, this is not the point to buy it, because this trend line has showed that it plays some role. So, I wouldn't be really surprised if I saw, some more whipsaw before pushing to new highs. But I do believe that we're going to see new highs in the DAX as well. I don't know when, but I have little doubt that we will. Okay. Now, how do the euro, the cable, Blake covered, they don't have much to add with that. Aussie still in this ascending channel, gave us a very nice reversal candle on Friday. Today will show us if that was actually something that had importance. It's too early in the day. I don't care that so far we have a white candle, until the end of the day, although so far it's a quiet day. But, I mostly care to see how we're going to close the day. But I'm monitoring this. I'm still short. Kiwi, on the other hand, I have to tell you that, from a structure, it gives me more of a bullish signal, because I see this as a triangle, and that's why I've also drawn this. If you see here, I really would find it quite likely that we might get another thrust towards the 78.6 before then moving lower. But it's a matter of time for the Kiwi to roll over as well, in my opinion, for at least a decent sized correction, right? So I'm not short the Kiwi, but I'm really looking forward to also selling some Kiwi if we make it to 0.74, of course. Okay. Now let's have a look at the Euros and the Euro Kiwi, since Abdul asked for it, and whoever else wants us. We have some more questions, but just letting you know. Keep on posting whatever you need us to see, and we're going to see together. Okay, I really don't have much to say about the Euro Aussie, and I'm guessing the same about the Euro Kiwi. I'm going to repeat what I've said here. Listen, I do see the potential for at least another leg higher, But unless we clear this zone in the euro kiwi, which is like above 171, and in the euro Aussie, we clear, call it, let's say 155.40. I can't call this the end of a corrective move lower, okay? I'm still viewing this as possibly as a corrective move lower in both the pairs. And, you know, these kind of candles that we put here, you know, are quite nice as potential reversals. But for example, in the case of Euro Aussie, we have to hold this 152.20, because obviously if we break below it, then I would be looking for the next zone of support, which is here above 150. Okay, and until we clear the levels I told you, I have no confirmed evidence that the uptrend is resuming. So if I was you, at least that's what I'm doing, I would keep monitoring them, but I don't see something actionable at the moment, right? At least not in the time frames I'm trading. NAFTA meeting starts tomorrow in Montreal, Joe says. Can barely hear Steve. Dale, can you, is my sound okay?
Sounds strong to me.
Yeah, same
Okay.
here, man.
Okay, okay.
They may have to log out and come back in.
Barry talks now about it tells me the ruble, the ZAR, the real, yuan, all in wedges against the USD. Okay, let's have a look at a few of them. First of all, since I had it on my chart, this is crude, by the way. Crude has already broken below this steep ascending channel, but I have to tell you that I still don't see downside momentum here. So yeah, we did find the top like 2-3 days after we thought that we would find the top, but I have to be very honest, I still don't see the signs of this move accelerating to the downside. I would really want to see like a day coming through with volume and size, I mean a sizable candlestick, to then say, okay, you know, this is probably now an indication that we're moving lower. I know that we've hit our technical targets. I'm fully aware of the fact that positioning is at extremes, but I'm still lacking like a strong candlestick or, you know, something technical that will tell me, yep, that's it. Because for the time being, you know, this can easily from a technical structure, I mean, now prove to be like a pennant, right? There you go. I mean, so far it looks like a bullish continuation formation, right? So far. So although I'm an advocate that crude is gonna soon find, you know, a top and roll over, because I see all the elements that needed, I'm just telling you to be cautious, because, you know, the technical structure still gives us no such a signal. And the more days we spend consolidating and slowly drifting lower, so we work out the overbought conditions, the higher the chance that the next move is going to be to the upside. I mean, ideally, I would already have liked to see a strong move lower. So, you know, for every single day that passes and we don't do that, I see an increased probability that, you know, we're going to push higher once again. So be careful. Just making sure I'm well understood, because on one hand, I'm advocating, you know, that we should find a top or whatever, but on the other hand, I need to tell you that looking for something doesn't mean that you should be looking on a chart and hoping that you see it, right? It's two different things. Now, I'm wondering about what kind of a wedge are you talking about here in the USD ruble, for example, Barry. I'm going to tell you what I mean. This was a wedge. We broke to the upside, but I have to be very, very honest with you. We haven't yet pushed to new lows, but I mean, this looks to me like a move lower, consolidation, resumption to the direction of the previous trend. So I would definitely not be long the USD here. I was long, actually. I had bought the USD ruble here. I had even marked it, some time ago. Let me get erase drawings, normal view. Okay, here. And I was really looking into that wedge for a possibility of actually, breaking up and then giving us a very strong move to the upside. But I started getting really troubled when we got that head and shoulders there. Not a good looking one, but regardless it was. And then we moved higher again, we got rejected, and then it started looking to me like a triangle. And a triangle after a decently strong move to the downside, I'm not going to tell you that, if you look at the big structure here, I'm going to tell you that if we're looking at the long-term horizon, that's an impulsive move. That's a corrective move. But, one leg missing here, right? In my opinion, one leg missing there. Let's have a look at the USD-ZAR. Same deal here. Exactly the same deal here. Exactly. I mean, it doesn't look the same, but the concept is the same. Impulse. Correction. Huh? Something is missing also. And, I got quite confident, although I bought it twice, and I bought it successfully, actually. I made money twice over the past few months in the USD-ZAR. I realized that this is a totally different structure when we actually started moving lower with force, and then I started saying, okay, this was likely a correction to this move, so at least we should then have an A, B, C missing, already broke the new lows here. I do think that the USD-ZAR is pointing the way for the USD ruble as well. The ruble hasn't broken below, the lows it posted in 2017, but, I think it's a matter of time, most likely than not. And you can see how bearish the structure is, right? I mean, when you're seeing after a strong move lower, a flat bottom triangle, that's usually a formation that will break to the downside, to the direction of the trend, in this case, to the downside, as it did actually. Now, I'm not refusing the fact that at some point in this pair we might get like some bounce, some corrective bounce. I was expecting and hoping, because I had said that I'm going to sell it, that we would jump higher from there, come back to retest that area so I can sell it, but it never happened. So after it broke lower, I think it's likely it might resume somewhat. Then at some point, obviously, it's going to give us some correction. If we go decently lower from here, then I would expect the correction perhaps to, I think it would be a gift if it came back to retest this 1230 area before moving lower, right? Something like that. Pound Aussie. Steve, do you still see the bull flag in copper? Yeah, let's have a look at it. Copper. Yeah, absolutely. Don't you? I do. That's what we had drawn several days ago, as you see. I remember specifically that I said that even if we don't break higher from here because we were there, it's okay if we resume, like it might be a double zigzag. It's fine. It's absolutely fine. Yeah, I do see a bull flag here in copper. Pound Aussie, pound Kiwi, already two friends asking. Sure. Barry is also showing us something. Let me see what he's seeing. This is a daily, right? Yeah, this is a short-term wedge. Might give you a correction higher to 58, let's say. But seeing at the bigger picture, I seriously doubt that this wedge is going to bring like a new force to the USD ruble uptrend. It's always nice to put the patterns in context of what kind of time frame we're talking about. yeah, sure, this can be interpreted as a descending wedge, although we don't have much certainty yet. I mean, the wedge support has only two places it touches, so you can draw any line like this, but yeah, it can create some kind of a rebound from 56, 57 to, let's say, 58. Sure, nothing moves in a straight line, there's no question about it. And another one, let me see it, Barry. I don't like this wedge. I can tell you in advance. I wouldn't take it so much into account. The USD one. I don't like it because it's the wedge's resistance is a little bit arbitrary. That's why. You know what I mean? You're choosing the upper part of a wick of a candle that is part of a downtrend. So no, personally I'm going to completely dismiss this as a descending wedge. I'm not saying that it cannot reverse from here and give us a rebound, but I mean that technically speaking, this is not a wedge. You don't have enough evidence to call this a wedge. The previous one, yes, absolutely. Pound Aussie and pound Kiwi. Let's have a look at it. Okay, same deal here as we had with the Euro Aussie and the Euro Kiwi. This is some kind of a consolidation. It looks bullish to me in the very short term, a triangle perhaps, like something like this. So really, if I had to bet on something, I would say that I see another push to the upside here as more likely than not, but that doesn't prove yet that this is the end of the correction. I would want to see a move above 175.70. So if I had to take a position in the very short term, which is not my style, I would probably be long. But would I be holding? No, I'm not certain yet. You know what I mean? Pound Kiwi. Pound Kiwi, it's currently on resistance, so I wouldn't be doing much about it. If it breaks above there, what's 192.30, that can prove a resistance as well. Still, this was a very strong day to the upside, but the price action that has followed since, look at it. Look at it. Look at the candles here. They completely lack momentum. I mean, nothing actionable here, in my opinion, yet. Not enough evidence that the upside is resuming. Not enough evidence that we haven't bottomed here. Perhaps, something like this. No, I don't think, I think you should wait more. Use the Swiss. Let's have a look at it. There we go. Okay, the USD Swiss has a nice descending channel. Friday, we actually had a key reversal there because we touched new lows. We even penetrated 78.6. We reversed. So far today, we've been putting on an inside doji. I would tell you that I don't see any, reward to risk to being short at current levels, but I wouldn't be long either. So what I'm trying to say here is the following: a rebound to retest the channel would then give a decent opportunity to try to be short once again. That's what I think. I mean, this is what I see here. Likely that we might get a rebound from here, but, will that be enough to turn bullish? Absolutely not. We would at least need a move above 0.97 to consider possible bullish implications. Up until 97, it's just, a correction, nothing else. So I wouldn't be selling here, but I would consider selling higher. Watch the channel, that low as well there, as you see, it was at 0.97. So it's kind of a confluence, the low we found there, the channel. I think 0.97 is an interesting level to watch. But even if we move straight lower from where we are, that won't change my mind. I mean, this is not a good place from a reward to risk perspective because, okay, let's say you went short now. And I'm telling you, there is a chance that it's going to resume lower from here towards the 94.50 area. But where would you put your stop loss to have confirmation here that, you have a good trade in place? I mean, that you're not going to get whipsawed or whatever, where would you put your stop loss? I mean, you would have to put your stop loss there, right? But what's the distance between here and there, and what's the distance between here and the next target? This one is greater, so you would be going in a trade with a reward to risk ratio less than 1. I wouldn't be doing that. Now, on the other hand, if you put a stop loss there, as I told you, a move towards the channel is quite likely. So you're going to get stopped out and end up being right on the right side of the market. Okay. Okay, let me see if I've missed any questions. Okay, no, that's it more or less. Anybody else have any other question? Dale, who do we have today, by the way?
Matt
Dale?
Thompson. Matt Thompson at Dynamic Vol.
Okay, and what is he going to talk to us about?
We'll find out.
Okay, I mean, what is he trading?
We'll find out.
Okay, I take your word for it. Is he here?
He is here.
Okay, let me have a look at the tier Y for Abdul, and you know, after that, in 2 minutes, you know, the stage is yours.
Sounds good, partner.
Okay, great. Abdul, we've broken USD tier Y. We've broken the descending channel, but I'm really not convinced here. Up. I think it's very likely that something like that's going to happen. Today's candle and the rejection from the 50 DMA, you know, so perhaps there is another leg lower. Only if we break above 389, I would be looking for new highs. I mean, new short-term highs, higher from here. That's what I mean. Okay, so that's what I see in the USD tier Y, and let's have a look at the Euro tier Y for you. That definitely looks more bullish, as you understand. Obviously, if you compare what's happening between the Euro and the USD, you know, no real indication of rolling over here. This can be another, you know, bullish consolidation. We even had an overthrow from this megaphone formation. It remains bullish. I mean, yeah, absolutely remains bullish. I mean, I wouldn't be trying to short it. It's like shooting in the dark, in my opinion. Okay, as I told you back when we looked at it at the previous time, which was a long time ago, only if we broke below there, I would really be, you know, trying to find targets to the downside. Now we're obviously quite higher, so, you know, things have changed. I mean, there are closer levels to where we are that we might be looking into. To begin with, you know, let's say this level, this area. But even that, even below that, then it needs a lot of work to actually turn bearish here. So, you know, we can talk about it later. I do see some divergences, etc. But, you know, this is a very strong uptrend. You should be very, very careful. Okay, Dale, enjoy the interview, my friend.
Thank you, Steve.
My pleasure.
I'm Matt. Welcome to FaZe. I'm going to make you the presenter, and we'll be able to hear your voice. And there's a screen share option if you want to show some charts. Thank you for taking the time to be with us today. I'm glad I reached out to you on Twitter.
Yes.
Hi, Matt. Yeah, I can, Matt. How are you today?
All right, great. How are you?
Very good. Nice to meet you. We do have a screen share function if you want to show your setup and things that you look at.
Okay.
So,
yeah,
there you go. Okay. So why don't we start with your Twitter handle?
Sure.
The assumption would be that you're a big follower of vol, volume precedes price. What would be your definition of dynamic volume?
Okay, so yeah, I'm the director of research at Kaizen Advisory in Wheaton, Illinois. We're a $250 million RIA, and so the volatility aspect is what, so I work with my brother. We've worked together for the better part of 15 years. And most of that 15 years, yeah, we got our fighting out of the way when we were younger.
Yeah, great, great to, you know, have someone, a brother, someone you could trust, and, you know, you guys know each other inside and out. And Wheaton, you know, that Illinois is my home state. I grew up in Chicago, but I know where Wheaton is. So.
Oh, wow.
Yeah. So
That's
where'd you go to college? Did you go to college in Illinois?
Yeah, University of Illinois. So.
Okay. Hey, all right.
Yeah, and so.
I was in DeKalb in the middle of the cornfields, Matt, and I had no idea I was going to trade commodities. So, so now that you talked about dynamic vol and you've given us a little history, so go back 15 years and tell us the story of how you and your brother decided to start a business, become RIAs, and, you know, I also see you have all the certified financial planner license.
The CFA, yeah.
Yeah. So how did it begin for you guys after you left Champaign?
Okay, yeah. So right I left in '99. Mike was graduated in '99. Mike graduated in '96. He's my brother, and so kind of pretty quickly after that, we at the time VIX didn't even exist as a tradable instrument, so we didn't leave school thinking we're going to trade VIX products. We both kind of have similar backgrounds. We started on the buy side, picking stocks, you know, at Northern Trust, and Mike was at William Blair for a number of years, investment bank in Chicago, and then I was at InvestNet and sort of doing more research on strategies and mutual funds kind of across the country. And I think what got us into the VIX space specifically was just if probably just happenstance played a large part in it. You know, we started, you know, I started my career at the top of the tech bubble and got to see, you know, some horrible years after that. And then, you know, quickly after that, we got into the housing bubble, and then obviously 2008. In 2008, we had just started in January of 2008. We started at a family office in the suburbs of Chicago, and we helped them kind of get organized, and then they gave us some capital and just sort of a greenfield, what types of, you know, go find something that can make some money. And obviously 2008 got us pretty laser focused on how VIX works. And then pretty shortly after that, the VIX ETFs came out in 2009. And so in that sort of environment is where we came up with, we started using, we built a VIX dashboard, we call it. So it's basically just taking in real-time prices and relationships in the VIX space and trying to point us in the right direction in terms of where volatility in the markets are headed. And obviously we can use that dashboard a number of different ways. We use it two ways.
People have made a fortune over the last few years selling the ECNs, TVIX, VIXI. Anytime VIX had a pop, and plus there's like this natural decay that happens in these ECNs. Is that the kind of trading that you do? Have you been taking advantage of shorting it?
Sure. Yeah, that's obviously been a nice trade in the last couple of years. But you know, going back farther, if we can get data, you know, starting from the beginning of VIX futures in 2004. And obviously that trade, the short side, has its moments where you want to stay far away from it and actually probably even be long volatility. And so really what we're doing is using our dashboard to just point us in the right direction and tell me whether I want to be short volatility or long volatility, or you know, not play in the market. There's those interim periods.
I'm curious, you know, we're in, you know, well, I'm sure you would agree that we're in some type of melt up that we've seen in the indices over, you know, starting at the beginning of the year. You know, of course, it started after the November elections over a year ago, but really we got into an acceleration phase. And just something an amateur VIX observer that I am has noticed that the VIX is no longer making new lows with averages making new highs. Is that some type of market message to you with what you see in the VIX?
Yeah, I mean, we're always obviously interested in the trend of just the VIX index, and you're right. It got to levels last year that I thought we would never see. Once even intraday, we had multiple closes. Yeah, I mean, it was just wild, and I think that has something to do with, or probably a lot to do with, some new participants in the industry, the way the VIX calculation has changed, the fact that there are expirations almost, I think, literally daily now in the S&P 500 options that make up the VIX. So there's been some changes, but yeah, in this year in particular, it's been interesting. So far, it seems like, we've had that lift sort of from the 9s to 12 in kind of a grinding fashion up with the S&P. Right. So that's been something that's caught our attention. And yeah, we're looking for, we know how the VIX acts. It's not going to go much lower than 9. Maybe it can spend a second in the 8s or something, but we know on the other side of this, volatility goes in cycles. It's going to be higher as the market eventually enters a bear market at some point. So we're sort of, our job is to look out for that turn and make sure we're on the right side of it.
Okay. Do you see it? Are we in this turn, or what evidence would give it to you? I know people talk about term structure.
Yes.
Where, it's kind of like the old commodity thing where you have backwardation or you just have a premium market. You want to explain that to our community and people?
Sure.
To that later.
Yeah, so term structure is a big part in our dashboard, and probably in most people's VIX trading. It's got to play a role. There's a lot of information in it. It's basically, since VIX is not like other commodities where the reference index, the VIX, is not ownable. So you can't, there's no cash and carry arbitrage like there would be in oil or gold or any other commodities. So it's more like euro dollars than it does S&P 500 futures, for example. So the term structure is usually upward sloping. The VIX is usually not spiking and panicking. And then each of the successive, there's 8 months usually at a time. And usually those are in an upward slope. That's kind of the normal steady state, no stress market. And then when you get an event like Brexit or something more sustained like a 2008 or the debt downgrade in 2011, you'll see the curve go backward and as the VIX lifts up. And that's just the VIX futures telling you that eventually things will get back to something more normal. But in the here and now, there's a little demand for hedges. So
right, because I started to hear people buying insurance for the past few years. They've stopped doing it because they go, what for? It's just been a waste of capital.
Right.
Right. Yeah. I mean, we all buy insurance hoping we don't need our, homeowners for a fire or health insurance for a health crisis. But people have gotten to the point where they weren't looking at it as buying insurance. They were just saying, why even spend the money? If anything happens, I don't need health coverage. I'll go to the emergency room.
Right. Yeah. You see a little of that. I mean, I literally saw an article from the Journal a couple of weeks ago. I think I posted on Twitter that said almost exactly that. I interviewed a couple fund managers in some capacity that just basically said, we're not buying puts anymore. It's basically just a drag on performance. And, I guess the assumption there is that the market is just going to keep going up and to the right forever. But that's a interesting one.
I think you have a different view.
Yeah.
So go ahead, tell us what you're seeing now and what you're advising your clients to do if you can, right, compliance wise. How are you positioning yourself with the S&Ps up around 2,800?
Right. So we're not looking at the sort of an imminent decline or anything. We're not positioning that way, but in the big scheme of things, we're 9 years into an expansion. Rates are rising. You've got more leverage in the system than has ever existed, and so we're just trying to be cognizant of that. Right now, obviously, clearly the trend is up for the S&P and down for volatility. We're starting to see potentially a little turn in the trends in VIX. and some of the vol futures. And so I think on the broader scale, we're looking at basically rates. Which way are rates headed? How fast are they moving higher?
Yeah, it must be a mind reader, because I was just going to ask you with what the 10-year's been doing, which is nothing compared to what 90-day T-bills have done. They've tripled. So go from 0.5 to 1.5. Do interest rates come into play as far as the price structure of VIX, financing them, or anything like that? Yeah,
so I mean, VIX has become like this worldwide proxy for risk, and I think we've seen a lot of, especially in the last few years, as VIX has become more mainstream, the VIX products have, we've seen some crossover buyers from, like the high yield market. We saw that in the first time oil really cracked, I think it was 50 in 2014. Yes. And the high yield market the spread started shooting up, and we saw some buyers from that market coming over and hedging in the VIX. And so before the S&P really had any issues, you started to see the VIX pop in that December period. I think it's all of these issues. So rates, I guess oil, would be another big macro factor, but to us, it's more, and to the VIX, I think responds more to the rate of change. So it's not so much a level. So the 10-year today, I'm looking at about 265. It's gotten up there. It's gotten from 240 to 265 pretty quickly. I would expect that, at this pace for another, if you see it shoot to 3 quickly, you might just start to see some equity weakness. You'd start to see VIX start to lift, I would expect. So we kind of keep.
I took a look at the chart, and basically the range has been, 1.3 for a low, 2.6 was resistance, I don't know, about 8 months ago, and we're there. That if you consider a breakout over 260, it measures up towards 390 or 4% is actually the technical target of what's going on there. But you think that the market, especially with these valuations, are going to start to feel it at a 3% big round number?
Yeah, I mean, again, it's if they have time to adjust to 3%, over the course of 6 months, say, that's a different story. Again, our background going through 2 bubbles and crashes, they were sort of set off by rising rates, and if the rate rise is quick enough with this much leverage, you have to assume that people have made some rosy assumptions with using leverage, and so that we're just looking for something that would kind of start the trend going the other way.
Okay, and so I'm sorry, I didn't mean to interrupt you.
Oh yeah, and so that's what we're looking for in very short term. What we look at though is the term structure and the short term trends in volatility. So really, what we're doing now is we're shorting the front end of the VIX curve, just based on the term structure. So there's decent decay there. We're doing it in smaller size, and we're kind of pairing that with some longer term long volatility, and so our long vol positions are in the deferred months, and that is kind of our.
How far out?
So we're in the ETFs. We're using that VXZ, which trades in months 4 through 7. So that's right now it's kind of the summer months, and the idea there is that's kind of our macro trade for the turn. If rates want to keep rising, if the Fed hikes 1 or 2 more times this year, I think that is probably a lower cost way to kind of get ahead of that turn. At the same time, we can kind of sip at the decay in the front that's happening on a monthly basis.
Before we get away from rates, do you take into account the yield curve and the way it's flattening? And do you think there's a possibility, if the Fed continues embarking on this tightening campaign, that we could invert? Because we know an inversion is usually not a great sign for financial instruments. So what do you think?
Yeah. I mean, we don't explicitly incorporate it in terms of like a formula or anything, but it's definitely something that we're watching in terms of just the larger macro picture. And yeah, you're right. In an inverted curve, it's not a great timing signal where you would want to jump all over a long ball or a short VIX position or a short S&P position, but it's something that again, in that longer, bigger cycle, we want to make sure we're on the right side of that. So.
Okay, so why don't you give us a quick tutorial on your VIX dashboard? Are we looking at it right here? Is that the
so I can, yeah, we can pull that up. It's basically, there's a number of things, but so really what concerns us day to day, obviously here's the VIX curve on the left here. I want to see an upward sloping curve and a very low level like we see today is an indicator basically that there's very little stress in the market. And numbers like, I mean, the whole curve up until recently, the whole curve was under 15. This is the 6-month contract still under 15. Historically really low number. I think the median VIX going all the way back to 1986, the predecessor to VXO index, this is still way below median even at 6 months out. So the extraordinary kind of confidence in by the market that there's nothing going to happen over the course of really many months now. Suffice to say, though, we look here. This type of market is a good environment to own the inverse VIX products because those basically will decay as these futures kind of pull in towards the spot VIX index. And so the dashboard monitors this relationship, to start, and then we also look at things like realized volatility in the S&P 500. How volatile has the S&P been in actuality? And that's actually been very low too. So we sort of look at that as the difference between the VIX index and the S&P's realized volatility is kind of a PE ratio almost for the VIX. So that has some value to us. And that's this difference down here. You can see this, the little blue mountain here is the realized volatility. It's almost off the chart. So it's, very low in the 6-7 area right now on a 10-day. And the blue line right here is the VIX index itself, which is up about 11.5 today. So that's a nice spread there. That tells us that VIX is actually maybe even a little overpriced on that measure.
So let me ask you about your a little bit here, man, because what you do is pretty unconventional for most RIAs. Most RIAs, they're just, they're in equities or, they'll do, the old, certain percentage bonds, certain percentage cash, certain percentage equities, and you're actually trading, taking positions in what's a pretty exotic instrument. Do you have to go through a different type of process of awareness, making your clients aware that this is your strategy, and it's not typical for an RIA? Am I wrong?
No, you're right.
Would not do anything like this that you're doing?
Yeah, you're right, and I think that's our background is kind of a hybrid between traditional sort of buy-side equity type models, which RIAs are heavily invested in, and then through the course of our careers, we got CFAs. The fundamental stock picking side is where we started, so we can speak that language when we understand what RIAs are going after there. And then over the course of really, it was in that 2008 period when we left that family office, we took our VIX strategy and went to the prop trading world in Chicago and traded it for a division of EDF Mann's balance sheet.
Okay.
And so that is complete opposite end of the spectrum from CFA fundamental research on stocks. So kind of combine the two. And
you and your brother are mavericks.
Yeah, we're wanderers. Yeah, sure.
So go ahead.
Yeah. So, we kind of have a foot in both worlds, the trading kind of quant world as well as the fundamental world. And then at Kaizen, we sort of married them back up, and we're trading a quant type strategy that is really futures based. We're trading it using ETFs and brokerage accounts that are very familiar to RIAs. And so our pitch to them is really just the portfolio effect of adding a VIX, a non-correlated strategy like this inside stocks and bonds portfolios really helps an RIA's business.
Interesting. Okay, so this would be a good time to show your website if you want to do that, and maybe talk about account size minimums, if you know what people would need to get started with you.
Okay, yeah. So at Kaizen, I mentioned we've got 250 million under management. The bulk of that right now is in 3 mutual funds, and so our web presence right now is on the mutual fund side, and that's kaizenfunds.com. I'm showing you here, and on here you're just going to see the 3 mutual funds that Kaizen manages. Very shortly, we're going to have on the RIA side some information about the VIX strategy in particular. So if you'd like to contact me, probably the best way to do that is either through Twitter at Dynamic Vol. You can message me there, or my email is matt@kaizenfindist.com. So Kaizen FINDIST.com.
Do you have an account minimum?
So account minimums are very low. So the strategy, the VIX strategy, we call it Alpha Seeker, and account minimums. I'm going to pull up a tear sheet here if you don't mind. There we are. So this is the VIX strategy, and these are live returns for going back 6 years. And the account minimums here are very low. We can do, technically down to $10,000. Trading, these are all separately managed accounts at TD Ameritrade, and TD's ticket for an equity trade is $4.95 now, or actually $6.95 through our setup.
Right.
And so the bigger the account goes, the cheaper it's going to get for trading. So really, probably 50,000 is more practical.
Okay. Nice performance.
Yeah, thanks. It's been a great type of trade, especially in the last 2 years. Has been really good. It's been actually a really smooth ride, which is an odd thing in the VIX usually. But yeah, there's beyond just the numbers. I think the way the correlation works with stocks and bonds over time, and those periods when we can be long volatility is really where the benefit of the strategy comes into play for an RIA. And I think that's why we keep looking forward to the next sort of an actual volatile market.
You're looking forward to gravity.
Right. It's going to come at some point. We know, maybe not. Maybe the Fed can keep this going forever, keep the plate spinning forever. But we're not planning on it.
Yeah. Well, Matt, I want to thank you so much for taking the time, and really a very interesting presentation. And you definitely are a hybrid from the RIA industry. Great performance, and anyone who's watching us live now or sees the video later, I think it's something that they could consider. Are they able to do this in their retirement accounts or only in after-tax accounts?
Yeah, retirement accounts. It's actually probably a better vehicle, because this does spit out some short-term gains. So there are some tax considerations here.
Well, thank you so much, Matt. I wish you and your brother a great 2018. I know when you get a hold of me, when you see something happening where the VIX is going to move, we'll have a moonshot. I think we could see 40 to, who knows, again, once it's going. So appreciate your time, and wish my best to your brother, because you're both, like it or not, now my trading warrior brothers. If you would have just been, if you would have just been a straight RIA, I would have just said thank you. But you guys have trading mentality, so you're definitely we're cut from the same cloth, from the same state, and I wish you nothing but success.
Thank you, Dale. You too.
All right, buddy. All right, guys. Thank you. You can get a hold of Matt Thompson, Twitter handle @DynamicVol, and Tom grew up in Lombard. All right, all you Illinois boys, that's a wrap. Remember, don't just count your pips, count your blessings. See everyone tomorrow for Turnaround Tuesday. Adios. Thanks again, Matt.
Thank you.